Boys, we're going to fire it up here. All right, good morning, everyone. Let's kick it off. All right, last night was small gains again in U.S. markets everywhere except for the NASDAQ. The Dow, in particular, clocked its ninth straight gain, which is the longest green streak in 16 years, and I believe that the previous or the longest streak ever is 13 days, which was in the 80s sometime. So I think this is important to realize. The market continues to just drift higher and grinding higher on us. That we are definitely in a bull market scenario. You don't piece together 9 days of green for no reason. So let's just keep that in mind. We saw that retail sales in the States confirmed that U.S. consumer is still in good shape, and just the data there continues to come together quite nicely. So I think it's really important. The one thing that we did get in Asia is that the China central bank governor made a comment saying that they're gonna be on high alert to overinflation after February's numbers, which are really hot. You can see commodities were under a little bit of pressure overnight between copper and oil and things like that. I think this is a big story. I think maybe it's a little bit overplayed. In China, there's always a big uproar when there's big increases in food prices and things like that, and so they have to really up the rhetoric. But I think at the same time, if they don't keep significant growth going there, there'll be even bigger problems. So this is something that we're going to need to monitor closely. Obviously, China is going to be what's going to lead our commodity prices globally for the most part, seen as how they're the biggest consumer of most, but something that we really need to pay attention to. And the National People's Congress also appointed Xi Jinping as the new president, which I think was totally expected, so no surprises there. I think really what we're just going to want to pay attention to is if there's any changes in major changes in policy from what the previous regime had going forward. All right, we had the INP. We've got INP quarter four sales and revenues release that's out later. We've also got tomorrow, and I'm not sure why they're going X tomorrow, but apparently today's it's a holiday next week on Thursday. That's it. So we've got a lot of stocks going ex-div tomorrow rather than on Monday. So you got to remember today will be last day to trade. Plus on Friday, we obviously have the FTSE and the SWIX re-ratings. So very important, I think, to monitor some of these things. Anglis is a 59 US cent divvy, which will come out to, I think, above 5 Rand. We've got Discovery, the SUIs, GNDs, GRTs, SNTs, and MSMs. So just keep those in mind today. Today is going to be the last day to trade. There's a few significant ones there, so it could affect some of the movements in some of the shares today. All right, we had a huge beat earlier this morning at Australian unemployment. You saw the Aussie dollar really ran up about 100 basis points on the back of that. Then we had misses out of industrial production and machine tool orders in Japan. The data there actually continues to be really, really poor, even with this weakening yen. But the stock market continues to soar. So obviously they're telling you how important the weak yen is. Then we've got retail sales in Spain, manufacturing production here locally, and then in the States later, we've got PPI, initial jobless claims, and current account balance, which obviously initial jobless claims will be the biggest number there. Those numbers have continued to improve there. I think it's something that, like I said, I really think over the past week or so, we may have shifted into good news is good news and bad news is bad news again in U.S. markets. So we can maybe try to react accordingly to that this afternoon. Also, we've got the last thing is the EU leaders are beginning the 2-day summit in Brussels today. So we're going to have to contend with that over the next couple of days. All right, let's jump into the maps here. All right. First thing I want to look at is ARIs. I'll shorten it up to about 3 months here. Well, it's the same chart. Let's see, 3 months. And just show that Roddy's favorite setup here, the head and shoulder formation that we've got going on. I mean, this isn't necessarily definitely a head and shoulder pattern, but if we fail to hold this 198 level, then we could potentially see the full formation of head and shoulders. We could go down here and test the neckline around $189, which is about 10 rand south of that 198 level. If you back it out a little bit, you can see the formation that I'm talking about here. And my only worry is that all of these local resource stocks have been trading really poorly. So it's one of the ones that hasn't really broken down yet. But the pattern, if we can't really hold above 200 here and we end up giving 198, then I wouldn't be surprised to at least see us test this 188, 189 level, and potentially even complete the head and shoulder pattern, which could take us down to as low as 175. So something to keep an eye on here if you're looking for a short in the resource space. CFR, which we've talked about. We talked about a week ago on the breakout on this flag pattern here. We liked that setup a lot as we broke out there. We talked about it probably trading back to all-time highs. Yesterday we closed above all-time highs here. I think the closing high was at 76.10. We also tweeted that out yesterday once we got above it. Just for a heads up. But this range is quite well defined. It's quite a beautiful pattern with the flag pattern here from between 69 and 76, which is a 7 rand range. So I would think that we look for the target to be the same to the upside of the breakout there. So I know that tomorrow we've got apparently monster selling coming on the back of the reweightings in CFR, so it can be something. It could be a bit of a bump in the road, but I think if we can hold 76.10, which is the previous closing highs, this thing could have a target as high as $83 in the near term. So it's something we need to watch really closely. This is a very bullish chart setup, and I know it's obviously getting a big boost for the rand, but the rand is in this price, and that's what we're following is the chart in total. All right, Exaro here, also longer term on the 1 year, we're coming out close to support. Support comes in around 160. It's actually around 161.50 maybe, which is on that trendline support. We've had a big fall over the past 2 weeks. I'm not sure if they're selling on Exoro tomorrow. I think maybe there's some small selling, but around $161.50 is probably what we're going to be looking at a trendline support. If it gives that, then I don't see any reason why we couldn't actually even come down and test lows of the year. Another one in the resource sector, Kumba iron ore, that's really broken down. The one thing that I want to show is just if you look out a little bit longer, the real protracted move has been this move from about 460 up to around 620, and we can look here on the fibs, and you can see if we run that from the bottom to the top end of the range, and we'll take wicks out, we'd be looking at around 520 in terms of support and retracement around 61.8%, which is the real level that I'd like to trade on the back of potentially. And that line comes in. What's nice about it is it comes in on lateral support as well, right here at 520 as well. So you can see there. I think this could be a significant opportunity. There's some big selling coming in Kumba tomorrow as well, from what we understand. So 520 I think could be a great little level to have a nibble on what has been one of the stronger stocks on the board over the past year or so. So look out for that 520 level in Kumba. All right, Bidvest. Bidvest got really steep on us over the past little while. I'm going to show it also in a 3 month, and you can see here when we broke out, we got really steep on this pattern. And we've broken below that trendline support. I wouldn't be surprised to see us be able to come all the way down to test where we really made our breakout from, which is around 225. And if we can, that also kind of coincides nicely with just a bit of a pullback that we could see, and some selling that we think is coming in the reweightings, which is around 2 million shares. So I think yesterday we saw a lot of stocks that were kind of heavy on the day. A lot of those match up perfectly with our reweightings. We saw that in the banks and standard banks and first rands, which are some of the bigger ones that have to be sold. We saw that in Naspers, which is one of the bigger buys that we saw that ran yesterday. We saw Bulletins that was heavy. It's also it has to be sold. MTN, Vodacom has to be sold. Bidvest. These stocks are all starting to line up. Kumba, these things are all starting to kind of go in order with exactly what we think is supposed to happen with the reweightings. So I think it's really important that we follow those closely. And the last one I'm going to show is INL. So INL's IMPs, the chart's going to look exactly the same. There's some selling that's coming in on this. What I find interesting is that this is the most bullish chart of all the banks. Well, I mean, Nedbank's chart also looked really bullish until yesterday, but right here around 68.50, and we can also hop forward a little bit. You can see right around 68.50. It's actually 68. 68.50 is the number. We've got support on INL, INP. I think this one also has some selling that comes in on the back of tomorrow, or supposed to have some selling. We're looking at another 60 cents from here, but if this level manages to hold, I think this is probably a good one to have a nibble on. This is another chart. I mean, if I can just take you through the chart setup, I mean, just look at that chart setup. Look at this chart setup. Look at the breakout that happened in breweries. The setup was basically identical. You can look at the breakout that happened in Naspers. I mean, these charts, all these patterns are the same. We've had a lot of this pattern recently in the market, and if you look at INL, INP, the pattern looks exactly the same, which would give us a breakout to around almost 70, about 73 bucks, 74 bucks. So we could have a lot of room to the upside on some of these things. If this level support holds at 68.50, it could be worth a nice nibble on Friday. And that's it for today, guys. Thanks a lot. The rudder.